So it is 12:30, so I'm going to assume everyone's here who's going to be here. Thank you very much for attending today's webinar. It's the weekly market analysis from London Capital Group. Give you a few moments to read the risk warning on the screen while I do so. Just to let you know, you can ask questions anytime. Just use the questions box right there in front of you in the webinar, and let me know, and I'll try and answer when I see the question or towards the end. Any markets you would want me to cover that I haven't yet, again, just let me know. So let's switch gears to the trading platform. Okay, let's try and make this full screen. So starting off with currencies as we normally do. This is the euro. Probably the least interesting potentially this week, given that we had the ECB last week and it's all the other central banks, well, the major central banks this week. We've got the Federal Reserve, Bank of England and Bank of Japan, of course. So all that set aside though, basically a continuation of what we've been talking about for a while is that we had that strong downtrend and at the moment we're consolidating. We're in a range bound market. So again, just to reiterate that really in this kind of environment, you know, just make sure you're not using your hardcore trend following strategies, breakouts above old highs and such like, below old lows, not tending to work as well. You know, you're looking more like trying to sell near the top of the range, trying to buy near the bottom of the range. For the time being, we haven't made it up to the top of the range. We've been, firstly, we were more constrained by this particular downtrend. You can see we broke above it and then we kind of touched it on the downside a couple of times. Now, more recently, we've been constrained by this shallower downtrend, and it's been this trend line which has been working vaguely well. This trend line, along with, you know, even if you didn't have the trend line drawn in, it's a zone of resistance in around here where the market's been dropping down from, and likewise call it a kind of a tightening zone of support down the bottom here. So this was our original bigger range. You can see volatility's contracting. So while you hear all the headlines about, oh, Brexit, you know, actually in terms of the pound against the dollar, sorry, the euro, you know, what am I talking about? I'm talking about the wrong currency here. All the concerns we heard about there from the ECB, you know, that hasn't really played out. What we're actually seeing is contracting volatility, but you'll see the same thing is actually happening in the pound as well when we look at the next chart. So for the time being, if you're able to adapt between range-bound trading and trend trading, then, you know, this is a range. So we're looking at buy and sell orders in and around these support and resistance zones, but we're obviously mindful of when we get a close through them, either on a daily basis or on a short-term basis if you want something a little quicker for you know, for you know, a slightly less confirmed but quicker entry on these shorter time frames. So firstly, you know, this 117.40 has been fairly strong resistance most recently, but obviously the stronger resistance is that 117.90 odd up here, pretty you know, just shy of 118 obviously. So a breakout above there would be further confirmation, but first signs that we're you know, once we get up to, say, this area, which would be the 117.40, we've got this downsloping trend line and our zone of resistance. So quite a good possibility the market rolls over from here. But if it only rolls over a little bit, then bounces back and through it, that to me would be quite a good sign that we're about to break through the resistance. And similar thing on the downside here. We've seen this zone of support working a few times. It's worked this most recent time, but if we can't get back up to resistance and then we drop substantially back into the support again, then it would imply we're about to go much further to the downside. Really very difficult to tell which way is which at the moment. My inclination is just to still stick with the downtrend, because making the assumption that the trend continues is always generally a good idea. Pound in a bit more of a clear-cut downtrend on the daily chart. The moving average is still lined up, and for this reason, you know, there's certainly reasons to believe that this trend may be about to reverse. For example, we have some bullish divergence here on the RSI. So while on these last three occasions price has been making lower lows, RSI has been making higher lows. So that's a sign of strength within a downtrending market, potentially indicating a reversal. But nonetheless, that to me is just an indication to be more cautious on where you're taking profits on your short orders rather than a reason to suddenly start buying, because the trend to my mind is still down, but just the risks of it reversing have increased. So if we drop down to the 4-hour chart, as it currently stands, we're, you know, well, before I do so, let's just say, well, we are in this trading range here, 130.40 up to 133.15-ish, if we're using this previous peak here rather than up here. But you can see it's basically about a 300 pip range. We're nearer the bottom of it at the moment because we had a little jump up and we've pulled back. So you can kind of see that it's all within the middle of this current price range that we have. So it's difficult to, again, take these kind of trend following type approaches. Even though I think the overall downtrend is lower, it's you know, while we're going kind of sideways here, I'm not putting too much faith, but you could say that basically we've crossed through this support. We've also broken through this rising trend line, gone back down through the moving averages, so potentially somewhere in this area we may have even got there already, and the pound is ready to break down again, in line with that longer term downtrend. How would we know it is maybe looking to do something else? Well, we do have this sort of downtrend here, which is kind of a quicker version of this trend that's kind of a little bit longer term here. You can see that we need some sort of evidence that we're getting through one of these either shorter term or medium term trend lines to indicate that the market isn't just consolidating before another drop. It's actually looking to challenge those old trend lines, challenge those old downtrends, and start moving to the top side. To me, it doesn't seem like we've quite got there yet. This area down here, just to say, categorized as a decent lower low, not just a false break. So thus we're still in a downtrend. Switching gears to dollar yen, this is probably one of the nicer looking trends. I think I've probably shown this fairly clear cut trend line as well, connecting the highs since 2015 going on this weekly chart. So we're in this, whatever you want to call it, potentially a triangle pattern of some sorts. You know, if you call this the base over here, maybe we need to come down and test this base at 101 again. But at the moment, we're challenging a potential topside breakout here. So last week we basically failed a breakout of this trend line. It wasn't the most dramatic failure though. So I think we can just going with the idea of following the daily trend. To me, this isn't too categoric. I think maybe we can still bounce from here, but if the bounce fails, rolls over again, and we have this long-term trend line that we're failing at, that would then be a sign to me, a pretty clear-cut sign that we're reversing this uptrend. But for the moment, this uptrend's in place for me, and we're in a dip in an uptrend, so that generally spells you know, lower risk opportunities. So you can sort of tell from all of those that we've basically been pulling back from a strong dollar trend. Obviously, the dollar could easily reverse to the downside and turn from consolidation to a downtrend again. There's multiple explanations you can give as to why that might happen, trade wars, etc. But to me, in terms of following the charts, it's not quite there yet. It still seems like the dollar's in an uptrend. So switching gears to equities, just starting with the FTSE 100, it's been quite a bizarre looking triangle pattern of sorts on this week, on this daily chart. Firstly we had this downtrend line which we broke, but we made very hard work of it since, of actually pushing to the top side. But we've had this supportive trend line through the lows, and so this is, if it is a ascending triangle pattern, kept wanting to say symmetrical, an ascending triangle pattern where this trend line at the bottom is ascending, the line through the top is horizontal, that's generally a bullish formation. So the bullish triangle formation, in combination with the fact that we've already broken this downsloping trend line, and the fact that we seem to have held the sort of 7,500 long-term resistance level, to me is all quite supportive of us breaking out here. But obviously made pretty tough work of it so far. If we are to break here, probably contingent on seeing a bit more weakness in the pound. So those two trades being very closely tied up recently. Moving over to the DAX, or Germany 30 as we call it. This is the daily chart. You can't see much from that. You can basically see that we're in this trading range from 11,700 up to 13,500 from a longer term picture, and we've just got these zones. So again, when you're trading in a sideways environment, you kind of want to pick the absolute extremes. So 11,700 to 13,500. So if we do a quick bit of maths here, let's see if I can do this on the fly without looking too ridiculous. 13,200 minus 11,700. I mean, of course, yeah, we can do this in our head, right? But just trying to make a point here. So 1,500 point range on the DAX here. Now, say we want about 10 to 20% on the bottom or the top. Well, let's just see what, if we've got 1,500, we want to see what 20% is. So times 0.2, that's 300. So you can kind of see 500 down to 200, that is 300 points right there at the top of the range, right? And at 11,700, we're talking more 400 points on the bottom side. But that 20% is generally a good kind of gauge as to where the zone is of support. 20%, you know, if you go much into kind of 30%, you're more kind of trading in the middle of the range, it gets a lot riskier. But if you're 20% being the kind of extreme of an area that you can look for when you're convinced you're in a sideways market, the market's dropping down, hits you 20%, it's kind of from that point onwards you're looking for signs of a reversal to the top side. So just a little something to talk about there. We're right in the middle of the trading range. So again, in the short term at least, we're pushing higher, but we don't know really how high we can go, because longer term it's it's looking quite choppy. So 13,200, obviously that big level to target on the top side at the moment. Though short term, it looks kind of okay. We've broken out, come back, touched it. Nothing really to assume that we shouldn't push further to the top side. European stocks were under the cosh for a little bit because it seemed like we might be in the focus of a trade war. That could still be the case, but at the moment, German car stocks, for example, car shares, automotive shares are getting back higher again after a period of concern that maybe the European autos are going to get import duties going into the US, but it doesn't look like they will for the time being. So a bit of positivity coming back into European markets. Switching gears to Wall Street. So we've obviously had a move through this 25,400. There's just this peak here. So something of a breakout, but you can see that we're basically still in kind of range-bound conditions. So it's not cut and dry that this breakout's going to hold. So periods like, I tend to stick with the RSI, but you can obviously add other indicators. For example, the stochastic. We default it to 5. It's a bit quick. The normal default is 14. So 5 you get the quicker signals. 14 it's just the original settings for it. You can see you know, they obviously give a delayed signal, as do all indicators, but you can see in this range bound environment, the stochastic has been picking the bottoms and tops not too badly. And you know, at the moment we're kind of putting in a little bit of a bearish divergence on the stochastic here. We haven't quite registered it in the RSI, but we have gone from overbought to out of the overbought conditions again. So it's a little bit of a sell signal on the RSI, and there's a little bit of a sell signal on stochastic, but the price looks like it's trying to break out. So it's a mix of those two signals. I'm a little bit cautious here. You know, we've got these two spinning top candlestick patterns on a daily chart, so probably better to wait for some decent breakout between one of those, either side of one of those, and either way should be quite decent with some volatility. Either we're breaking out of the range or we're just heading back down to the bottom of the range again. Probably should, that is our short-term chart. So you can see we've broken out bit, you know, not too convincingly, dropped down, but we've held that that long-term, that previous resistance level so far. If we drop back down through it, you know, maybe on the short term, look at 25,200. But as I said, I would think if we do drop back through it, it's a bit ominous. Moving over to gold, bit of a similar story to the major currencies, where it's consolidating, potentially chance for a bottom here, but for me, much too early days to say that. Looks very much like a still in a downtrend environment, but we've just got a little bit of bullish divergence between this low here and this low here. We obviously did have a couple of strong wicks to the top side, but we're kind of consolidating at the moment, and we've just found a little bit of short-term support, this old low, and the moving averages are perfectly on top of each other, showing that we're in a short-term range. So if you are, so the long-term trend is down, but we're down near support. If you're playing the short-term range, obviously you could go against that long-term trend. Better opportunities might be waiting for a push up to the top of this short-term range to play in line with that longer-term trend. Last but not least, the oil market. So again, another range-bound market. You know, formerly bullish, but it's gone pretty sideways of late. Didn't quite pull off that downwards break. That's quite a positive sign that this was basically a false breakout down here. But I think it's not been the most explosive move to the top side, and we're basically reaching this this area where it's got the old high. 75.50 is a bit of a round number, and we're right in between these two moving averages, which are unusually close together but not chopping around each other. So the 50 and the 20 right there in this zone between basically 75.50 and 75.80. So quite a short, or I guess probably you could say 75 on the downside, 76 as an extreme on the top side. That 75 to 76 area looks quite decent potential for the market to roll over for there. So watch out for a sign of it. If it doesn't, then actually we're looking positive again. Maybe we're going to push up through 80. Okay, yeah, we've been quite efficient today. I think that's 20 minutes in. Let's wrap it up there. Good luck with trading for the rest of the week, everyone. It's Jasper signing out.